you have to understand crypto, some of these names are down 80, 90%, even the good names. And we felt that in our portfolio. Everybody's getting killed in crypto. There was a time about 12 months ago, and we had, I want to say, 15 positions in a portfolio. The average position was up over 600%, right? When you talk about risk reward, it's amazing. 600%, the average position. That's how we really nailed the market. Now you're seeing everything come down. I've been preaching this for over 3.5 years, 4 years since I've been into crypto, where 90% of this industry is complete garbage. However, even, the report you cited, this is Matthew McDermott, Goldman's head of digital assets, right? And this story was from Reuters, right? So, very reliable. But it's saying that McDermott, and I'm quoting him here, he says, definitely set the market back when he's talking about, FTX, set the market back in terms of sentiment. That's absolutely no doubt of that. He goes, FTX was a poster child in many parts of the ecosystem. But to reiterate, the underlying technology continues to perform. And that's another thing I've been saying, where this is where the innovation is coming from when you're looking at Web3 and some of these companies. When you're seeing the top 50 cryptos and the best cryptos also down 80%, there's a lot of good names where the utility function is amazing, to where, they're burning the tokens, constantly buying back the tokens where it's linked. There's a lot of great names out there that are linking their tokens in the right way. That's why Binance has held up, because you can use Binance token for so many different things. You can lower your trading fees. You can buy so many different things that it's tied to with that coin. That's the utility function. So could you do that? That's what I'm pretty sure Scaramucci did with FTX. He chose to say, okay, we're doing a deal. And I think he got some of the FTX token, which again, would turn out to be worthless. But looking at some of these assets and where they are, if you're a believer like me, like, this is the future, where you can click something, and I did this yesterday. Okay, it was so funny because I got railed on this on Twitter. Getting into NFTs, and a lot, again, that's 95% of industry shit. But I got into something called Killer Bears. It has a massive community, and a lot of people who are, my traditional, followers on Twitter were like, "Oh, this is pumping up. This is bullshit. Whatever." Here's a guy that's actually just like Disney. He's telling a story, creating these products. It's going to come out, all these things in a game. You're allowed to stake some of these things. Again, this might be a little above your head, but I'll explain it to you, for people in our crypto newsletter. These things are up 300-400% for me. And this is kind of like, okay, I want to see how this is done. But as I'm staking different things as they come out, where, you're staking them, and once you do that, they'll give you like certain products or whatever. And Seth Green's involved in this project, and they're making movies on Killer Bears, where it's coming out, where it's seeing more search results on OpenSeas than Bored Apes, right? So again, it's having contacts and the right contacts in this industry. My point is that when I'm going through this, I can click a button to stake, and automatically it gets recognized in a blockchain. Blockchain, fact, authentic, right? So that is incredible, right? It's like getting a patent immediately. You own that forever. It's on a blockchain. You have proof of it, right? So when you're creating something, if anyone else wants to sell it, you have proof that you own it immediately on the blockchain. Okay, when you look at this technology and you look at what's coming out, and that's all part of the metaverse, and that's a bad word to say these days because everybody believes, oh, I'm not going to sit there and play. It's not that. You're basically on the metaverse even right now on your phone. It's finding a more better experience for people to buy products, to do different things, except you have total ownership. It's not owned by the 5 biggest companies in the world, technology companies. Okay, so you have all this ownership that you're going to have. Everything that you build, you're going to own. You get to sell. You get to have royalties off of this. Okay, this is an industry that's going to be booming in the years ahead. Goldman is smart here. Said, listen, I'm going to go tens of millions, which is not a lot to them, into some of these things. But the levels that these things are trading, again, even with markets going to be choppy, many of these names are down 80, 85%. And you look at the markets right now, the S&P 500 is down, what, about 15%? So, there's a lot of the downside is priced in. And when I said about the market share going down and going lower, yes, it makes sense because these are the companies that are going to take market share and be the owners. And I can picture Goldman making a big investment in Coinbase. And I can tell you why. Going through their balance sheet, this is a regulated company. They came out of high valuation, which is crazy. They have $5.5 billion in net cash. Their market cap is below $10 billion. Yes, you're going to see their monthly active users decline incredibly, right? Which was their bread and butter. But now they're more institutionalized, where I think it's 75 or 80% is institutions. They have their stable coin, which everybody flocks into when times are tough. That's kind of a money market account, and they make a ton of interest to the point they're going to generate over $700 million to $1 billion in net interest income this year, which is an incredible number, right? So now they have a massive employee base, which they can cut easily and cut those costs. But me, I'm taking accounts, and I'm having my business accounts there, which are an FDIC insured. So Coinbase right now is becoming like the player that institutions go to, that businesses go to have your protection. They put me through the grinder, which is great. I had to answer about 80 different freaking questions. I still haven't gotten approved yet because it's taken me like 2 weeks to open an account there. That's fine. I'm okay with it. I'd rather that than getting a business account someplace else where, if they freeze your assets, you're fucked. So looking at this industry
take them.
And who the winners are going to, I think they're going to do both. I think you're going to see investments in token, investments in private companies, and also investment in a few publicly traded companies that look really good. Let's see what happens with Silvergate. Again, there's a lot of shit on Silvergate. I haven't seen the fraud yet on Silvergate, what everyone's claiming. Yes, you're seeing demand. Yes, you're seeing more and more companies remove assets because they're getting worried because you saw FTX, which caught everyone by surprise, and Voyager and stuff. But overall, that is a bank that's regulated by the Federal Reserve. All the numbers are there. They're trying to say they didn't have, that they were transferring money from the accounts balances from FTX, which they don't hold the account balances there. They have FTX, but they're saying that they transfer those balances to Alameda, whatever, and they're trying to provide proof. And Warren's gotten involved. Again, it's a stock that's a little crazy. I would be more inclined to buy calls if you had money to lose because I think that stock could skyrocket from here, or and go. Who knows? I mean, maybe they're able to prove it. I haven't seen it yet, but the survivors here in crypto are incredibly cheap. This is where the innovation is coming from. This is like buying technology stocks in 2002, 2003, holding on for 10 years. And this is something that would be life-changing for you. I truly believe that. So I like what Goldman's doing here.
Well said. Goldman, you're on the clock. I want to see a big purchase of Coinbase, Marathon Digital, maybe even Silvergate. They got to have some fun. They got to throw some press releases out there.
Galaxy's another one, right? It has Goldman ties.
That's not going to happen. I own too much Galaxy. I'm not going to get that lucky.
They have ties. They said, I don't know, whatever it is, the exposure that they have was like a...
Well, that wouldn't be crazy because they already do trading partners, and Novogratz, CEO of Galaxy Digital, is a former Goldman guy. Yeah. To your point, I think it's smart of them to do that. They're so big and powerful and smart that it would be silly not to look in a distressed asset class like this, especially with the volatility in history. Yeah, so they're on we need a countdown clock. We want to see a big press release.
Larry Fink, like just someone that's and that's Novogratz. And Goldman may say, hey, you know what, let's get behind this guy. This is the firm we want to get behind, and we'll see. But even the publicly traded companies make sense because at least you could see the numbers, and they're U.S. regulated, which FTX, it didn't matter if the regulation was here because it's a foreign entity. So it didn't even matter if you had regulation here. They wouldn't have stopped it. So, but we do need regulation here, and this is where the innovation is coming from, and it's incredible.